This video goes over sample problem number 7, which focuses on itemized deductions. Recall that we have standard deductions or itemized deductions. Select the larger of the two. Standard deductions is the standard amount that's given based on the filing status. Compare that to itemized deductions, which are personal expenses that are itemized, listed out, sum them up, and see if it's higher than the standard deductions. Then we would want to select the itemized deductions, and that's what mainly this problem is about. Ashley Moore is 66 years old, single taxpayer. Right away, it should ring that she is over 65 and qualifies for the additional standard deduction. If so, we choose the standard deduction. Ashley receives salary from a part-time job. Her gross wages $36,000, federal income tax withheld, and state income tax withheld. Gross wages, we know that goes on line 1 of Form 1040, and income tax withheld, line 17 of Form 1040. What about state income tax withheld? Not relevant in this problem. In 2019, she received the following: interest on her Wells Fargo savings account. By now, you should know that this goes on line 2B of Form 1040, taxable interest. A refund of $350 from the state of Georgia for her 2019 tax return. She itemized and deducted her state income tax paid in 2019. So this refund of $350, is that taxable income or not? It depends. Let's take a look. In the book, it says, if the taxpayer receives a refund of taxes deducted in a previous year, the refund must generally be included in gross income, line 1 on Schedule 1 of Form 1040. So the taxpayer received the refund, and it must be included in gross income in the year that the refund is received. Taxes which did not provide any tax benefit in the year paid are not required to be included in income in the year received as a refund. So taxes which did not provide a tax benefit. In this case, the taxpayer itemized her deductions, then she is getting a benefit from the deduction, from reducing her tax because she's trying to itemize. If instead she takes a standard deduction in the prior year, then that's not getting a benefit. That's just part of the standard deduction. Okay? When, as it says here, the taxpayer claiming the standard deduction in the year the taxes are paid does not receive a tax benefit for the payment and is not required to include in income a tax refund received the following year. In our sample problem, the taxpayer itemized deductions and deducted her state income tax in the prior year. Since she itemized, she benefited by taking the itemized. So she must report it in Schedule 1 as miscellaneous income, and that's what we need to do here. If rather she took the standard deduction last year, then this year when she gets the refund, it would be not counted as part of her income. It wouldn't be miscellaneous income or be taxed income. It wouldn't be counted at all. State tax refund is miscellaneous income. We report it on line 1 of Schedule 1. 350 goes here. This 350 is going to flow down to the total on line 9 and carry over to line 7A, other income from Schedule 1, line 9. 350 here because we had itemized deductions, and so the refund would have to be miscellaneous income in this tax year to be taxed. During the year, Ashley had the following items that might qualify as itemized deductions. Number 1, amounts paid for health insurance, doctors, dentists, chiropractic care, $4,000. Yes, $4,000 qualifies to be itemized deductions under the medical category. Line 2, miles driven for medical purposes, 1,200 miles. Recall from your book, 20 cents per mile. So 20 cents per mile times 1,200 miles would equal $240. $240 plus the $4,000 comes out to total qualified expense of $4,240. and there's no reimbursement, so the full amount would qualify, right? Medical expenses can only be deducted to the extent that they exceed 7.5% of the taxpayer's AGI. Your book may indicate 10%. That's because it went to print when they had changed it to 10%, but then the IRS changed it back to 7.5%, and that's what we're going with here on this form. Line 1 on the form, medical and dental expenses. The qualified expense is $42.40, line 1. And then line 2, we show the AGI, $36,600. Then line 3 multiplies the AGI by 7.5% to get you $2,745. Then take line 1 minus line 3 to get the amount of qualified expense that's above 7.5% of AGI, and that's your medical and dental expenses. That's deductible, itemized to be deductible. The second section on Schedule A for all itemized deductions is taxes. 5A, state and local taxes. It says you may include either income taxes or general sales taxes on line 5A, but not both. So you will select either of the two. Typically, taxpayers would select the income taxes because sales taxes is difficult. You have to keep track of the amount of sales tax, all the records and supporting documents. Let's go to the sample problem. Here we see state income taxes withheld, $500. Before I say that this wasn't relevant, but it is. It is relevant to itemized deduction. That's $500 plus all these taxes down here. These are estimated tax payments made to the state of Georgia. It's made for the tax year 2018 and for the tax year 2019. For the tax year 2018, it was paid in April, June, September, and it was paid in 2019. So for 2019 tax return, we want to itemize the tax expense paid in the year 2019 for the deductions. It would be this $400 in addition to $450, another $450. This $450 also relates to the tax in 2019. However, it was paid in 2020, so we wouldn't include that. The sum of this $400, $450, and another $500 from up here, that totals how much? We would itemize $2,250 here on line 5A, and then 5B is the state and local real estate taxes. So let's go back to sample problem. Right here, we would itemize the total of all of these. That's $4,400. $4,400 goes on 5B, state and local real estate taxes. On 5C, it's the state and local personal taxes. Where is that? At the bottom here, we have auto ad valorem taxes paid on the car, $150. So populate 5C, $150. 5D is just the sum, which totals $6,800. Carry down to 5E. And then line 6, none, so 7 is $6,800. That's the total for the taxes paid to itemized. The third category of itemized deduction is interest paid. On here we do have one. That's the home mortgage interest, line 8A. Let's go to sample problem. Where is that on here? Mortgage interest paid on form 1098. That's the form you receive at the end of the year from the institution that you paid the interest to. So it's $5,000. Let's go back on the form, itemized deduction, and input $5,000 here. It carries down all the way to 8E, $5,000. And the total on line 10, $5,000. What about these other lines here? Not relevant to the sample problem, but it's relevant to the information in the textbook. Another category of itemized deduction are gifts to charity. Line 11 reports the gifts by cash or check. So the taxpayer would made a cash payment or wrote a check to any of the charity, United Way, Baptist Church, And any of these gifts that's 250 or more, we need to report them. Line 12, if it's not cash or check, then we report in line 12 gifts of 250 or more, and we also must attach form 82, 83 if it's more than $500. Let's go back to sample problem and see. In line 6 here, yes, cash or check. Contributions that were made to the church, United Way, to campaign fund. Is that a charity? No, it's not. How about line D? Miles driven as a volunteer for her church. 300 miles. Yes. It would be counted as 14 cents per mile times 300 miles. That would equal how much? $42. So 42 plus 400 plus 800. That comes out to 1,240. Let's report that. 1,240. How about for line 12? Go back to the sample problem and see. That relates to line 7 here. Clothes and household items donated to Goodwill. And $600 worth. Some type of document was provided by Goodwill. So 600 is reported here. Then the total gifts to charity is 1,840. What about the next category of itemized deduction? Casualty and theft losses. None in the sample problem. What about other itemized deductions? Also none. So then the total itemized deduction is, you sum up everything above, it's $15,137. This is the amount of total itemized deductions, personal expenses that may be deducted, but it would depend. Compare this to the standard deduction, and if it's more than the standard deduction, we would want to use this to reduce our taxable income. It gets deducted from taxable income, right? On Form 1040, don't forget to make the checkbox here for single filing status as well as being born before 1955, taxpayer over age of 65. And so the standard deduction is $12,200 plus the additional standard deduction of $1,650 for a total standard deduction of $13,850. Compare that to the amount of itemized deduction, $15,137. Which is higher and which would you want to use? This is higher, and that's what you want to use for the higher deduction. So go to line 9 and populate 15,137. A higher number of deduction here would reduce your taxable income a lot more. You want this number, taxable income, to be low so that way you pay less tax. We've gone through itemized deductions on the sample problem. Be sure to read your book for comprehensive information on itemized deductions. Details on each of the categories of itemized deductions, what makes it qualify, what are some of the taxes or interests, and these are deductions from AGI. There are other deductions such as health savings account, IRAs, and so forth.